Hello, and welcome to another day of TA the Degen way. Just wanted to pop on today and take a look at some of these macro projections from months ago to the long side for Bitcoin. And this chart is on our CryptoFile TradingView Ideas page, CryptoFile 622. You'll find a link to our Twitter in there, and there should be a link to the Discord in the description of this video, where we're giving real-time updates and daily AMA around 8 p.m. Just daily updates throughout the day in the discussion group. But this chart here is from about a week ago, but I wanted to look at some of these older ones. This here, I believe, came out in April. And just a couple things I noticed on the Bitcoin chart. There's kind of a lot going on here. So I think what we'll do is go through what this chart represents and how we come up with this target of 137,000, 135,000 for a potential bull run high. The most important thing and purpose of this chart is on a log scale, if you go from swing low to swing high in each bull run and its corresponding bear trend, bull run, bear trend, bull run, bear trend, you'll see if we adjust the price scale, we'll adjust it so the first one is at 75 degrees, we're losing about 15 degrees of time versus price. Let's go ahead and pull this into TradingView, go to the share button, make it mine. Looks like I have too many charts saved already. Let's pop over to the regular chart. Well, let's just take a look at where Bitcoin's at right now. If you were in our Discord, we took the long trade from back here and added to the position here, and since the 22nd, been very bullish on Bitcoin, and you can see prices come up and push to the upside. We've kind of put in a little bit of a bull flag, had a little bit of bearish divergence. This was put in on a very small time frame for the hit-in, but the hourly eventually it formed. And we got a pullback and projected a pullback to the point of control. If you take your fixed volume tool, up here, fixed range volume profile. If we take the whole range, our POC comes out somewhere in this area. But why 26,685? Well, we hit that to the dollar, and that price was posted in the Discord at this high when we started forming this divergence, and the low is looks like 26,685.93. Hit it to the dollar. Now, we might still pull back a little bit here, but if we take a look at the local oscillator, you can see it rotating back to the upside. So my guess is we will continue to work our way to the upside to some of the targets posted on the TradingView idea page. And what I want to talk about today is this macro chart. We want to port it into TradingView, so we got to go and delete some of these old charts here. If you got too many charts, and you may need premium to pull these charts in, I'm not sure, but you can go to load layout. They allow you 1, 2, 3, 4, 5. We'll delete the one that we got open. And now we should be able to make it mine. And there it is, everything from the idea chart pulled into TradingView. I don't know why I got rid of all of our lines, which I don't really appreciate very much. Well, whatever. But we're going to do a little exercise, and we're going to show the rate of diminishing returns. So this is time on your chart, It's a XY axis. It's two-dimensional. Time versus price. And really, this isn't price. This is time versus percentage gain in value over time, because we are on a log scale. So let's go from the first bull run in Bitcoin to the top. Now I want to adjust the chart, the aspect ratio, to get this to be 75 degrees, but still get everything to fit in here. There we go. We're at 75 degrees. Yeah, we can use that. So there's 75 degrees. Now let's take the next one. Let's go swing low, swing high. 59 degrees. It's about as close to 60 degrees as you can get. But what does that mean? Does the angle actually matter? No, it's the degrees, the rate of change versus time, that matters. So here, if we take this low on this double bottom, we got 43. If we take this low, we got 48. The true low, I'm going to say, is right smack dab in the middle, which is pretty much 46 degrees. And if we're starting with this first one at 75, we got 75, we got 60, we got 45. Let's keep her going. This low. Here we got 35, go to the true high, and we got 30. So this is losing how much it pushes up in its bull run versus time. 15 degrees of time versus price. That's diminishing rate of returns over time. There's a clear pattern. Starts out at 75 to 60 to 45 to 30, and if we kept the same rate, the next would be 15 degrees. So if we get this line at 15 degrees, now this is not telling us how high the price is going to go up. It's just saying that the top will be somewhere along this line. So now if we consider just our last old high, we would be looking at hitting 62,250, the 62K range area, 64, whatever that high was, in May of 2025. So if we follow the curvature of the price action, which was another thing that was on that chart, this is where that chart gets the 135 to 137,000. We don't want to change the ratio. I don't have it all exposed, so we're just going to slap this on here, get it all exposed. Now what we want to do is we want to follow the curvature of this price action. Just this curve to match up nice. There, I believe we're pretty much catching all of our highs. If we come down just a smidge on this one. There we go. Looks pretty fair. And where does our 15 degrees meet our price curve? At about 135,000. 135,000. So if we follow this diminishing rate of returns of time versus price, we follow the growth curve, that would give us a target of 135,000 sometime in the middle to third quarter of 2026. I mean, that's not to say that we don't, do a double top or a triple top, quadruple top. This, to me, is one of the reasons why I think this may be a mega top. So let's take these down thrusts. That's 48 degrees. take this one, 38 degrees. Let's take this one. I want you to guess what it might be. 75 degrees. Awfully steep. 35 degrees. 38. 48. 35. So I mean the downtrend seems to be pretty similar. These last couple ones. So let's just take that 35 to 45. We went as high as 75. We'll just take 40 or so. Say we do a pullback to our current range, where we found our first serious resistance right here in price. We've pulled back and now hopefully pushing upward. You know, the next on this following that would be 0. And then if you continue to follow the same regression cycle, well then, you know, you'd be 15 degrees in the negative, 30 degrees in the negative, 45 until, you know, maybe eventually it reaches 90 and comes back to 0. That's where this chart gets a 137,000 from, is following the rate of diminishing returns of exactly 15 degrees of time versus price. And we could start this out at any number we want by adjusting the aspect ratio here. We could start this out at 60. I mean, it doesn't really matter. It's still, well, let's just do 70. So what would this be? You know, it should be 55, but we're at 52, close enough. What should this be? It should be, if this was 55, this here should be about 40. Well, it's 38. This here would be 25, so then this next one, you know, we would expect to be at about 10. Well, it's at 12. I'm sure if we adjust it a little bit, we can get it right on the money if we wanted to, but that's not the point of the exercise. The point of the exercise is to show the mathematical relationship of time versus price. Here's the growth curve. It's getting flat. Time and price are square. Somewhere up in here, we're getting macro top signals like double tops, diminishing returns, divergence. There's a yearly engulfing candle, and there's all kinds of things on there. And I think we will look back in the future, and if price doesn't reject here and come on down some, we will see our next bull run take the liquidity above the highs and then come back down and range here. And maybe this is the true price range for Bitcoin. Maybe it pushes up to $1 million or whatever. I'm not going to make those claims because there's nothing on here to show that as of right now. But if we look at this, we would expect this to go flat and go into at least consolidation by looking at, you know, this relationship of the growth curve and this loss of 15 degrees of price increase versus time. Gives us a target of about 135,000 while we're still on the same chart. Let's just see if any of our other projection tools give us the same 130K, 135K range. Did we draw a line? We did not. So that's about where they cross, at about 130K, 135K. I'm going to go ahead and delete everything else. I just want to see if there's anything else on here that corresponds with that target. Why don't we take our bear trend? I don't consider these to be bear markets. 85% retrace on million X pumps, you know, ain't really a bear market. It's a bear trend. 85% dip after this price increase, and there's not a lower low on this chart. It's all up and to the right. We're looking for that to happen either this cycle or next cycle. I'm open to this cycle. That's why there's an 8K potential Bitcoin chart, because there's a potential for 8K or lower Bitcoin sometime. Maybe not today, maybe it takes off and the range doubles and we end up at 250,000. But what else do we got? Let's take this bull run and this bear trend here from swing low to swing high, and let's expand it by 1.5 to 1.618, and lo and behold, the 1.5 comes out at 143,000. Let's throw a 1.441. Why that works, I'm not really sure. I mean, that comes out to be pretty close, 131,000. Just seems like a reoccurring number I see in short-term trading, where people front run the 0.5 or the 1.5, and usually at about 44%, you see a rejection. So that's coming out at about 130K. Now I want to take our lower price range here, and let's start expanding this to the upside. Let's see if we get any equal repetitions of this range, as in 1, 2, 3, and rather than use the fib tool, we'll just represent it visually with a box. So let's go to our rectangle tool. We're going to go from swing low to swing high. Let's copy and paste. Start stacking them on top of each other. We gotta get them lined up a little better. And you can see the mathematical relationship between ranges clear as a bell. There's the lower range. Oh, there's the upper range. Why does your fib tool work? Very simple. Price makes a range. That's the true range that it trades in. So when it breaks out of this range, the expectation is that it is going to fill in the same equal range above. So, you get a 50% pullback. It expands by one range from a 50% pullback. Well, then you're halfway into this range. Pulls back half a range, expands by, a full range. And when it starts only expanding by a quarter or a half a range, well, then the trend is getting exhausted. But there is two ranges. Let's throw a third on there. And we would be looking for price to end at, the top of the range, 3/4 of the range, 50%, 25% of the range, and the bottom of the range. So, I would consider this to, anywhere in this upper 3/4 of the range to be valid. So here's 50% of the range. So at about 125K. So 125K to 150K. I think that's it for this chart. So what was the point of this chart? And we'll flip back. It has the growth curve coupled with going from swing low to swing high in every bull run since Bitcoin has began, and it is losing 15 degrees of time versus price on these major swings in the market. So at the last one, if we went from 75 to 60 to 45 to 30, we would expect the next one to be at 15 degrees, a much slower price rise. Or maybe price comes up and hits this real high target real fast, but then just keeps trending over to the side and then dips. But that is it for this one. And there is a second long-term macro projection chart, BTC Long Haul. I think what we'll do is a second and separate video on this, but just to give a quick overview on it. If you want to check back in later, maybe we'll get to that today or tomorrow. This here is giving us the time cycles. Here's your downtrend, 67 weeks. Your sideways trend, 67 weeks. Uptrend, 69 weeks. You could have just said 67. So now if we follow the same format, here's our downtrend. Here's where it broke trend. That was 62 weeks. We should assume a sideways market for 62 weeks. And sideways is anything from, 69, 68K, whatever this high is, down to the 15K low. You know, anything in here is considered consolidation inside this price range. With a, if we did a same distribution style as back here, we'd be looking at a top once again in the 150 to, I mean, I've got it as low as down here, and coming out at about this time. But oh, we'll just do it now. We'll just hop on there right now. Let's go ahead and let's delete this layout. Load layout. We will delete it. Now we're going to come back here. We're going to go to the share tool. Only 3 boosts. Come on. This is a good chart. We'll copy, or we don't want the link. We want to make it mine. Now that has pulled this chart into Trading View. So what's going on here? We've already kind of showed it. This is what I'm going to do. I don't know why I even pulled it in here. It wasn't even really worth it. We're going to get rid of the oscillator, because right at about 50% of this time frame, this time cycle, we're printing a green dot on the wave trend oscillator. If you've watched any of the recent bullish videos in the last week or so, you already know why I am bullish. But we're going to go ahead and just hit the delete button on a lot of this stuff. Just show where it comes from. We'll get rid of the distribution cycles. And let's look at this. So here's our downtrend. I've demonstrated this in past videos. There should be a video, I believe, called Fibonacci Time. Fib time doesn't have anything to do with it. I'm not going to explain it. Go back and watch the video. We don't go to the trend low. We go to the break of trend. That's 67 weeks. Now what this is doing, I'm using the Fib time tool, but I've changed it just to go 1, 2, 3, 4, 5, 6. So it's just a regular cycle tool. It's not going 1, 2, 3, 5, 8, and on down the Fibonacci sequence and time cycles. Maybe that works, maybe it don't. I find it accurate and only necessary to cycle out 3 cycles. Here's 1 cycle. Now I'm going to duplicate it. There's 2 cycles. I'm going to duplicate it again. There's a 3rd cycle. The reason, you know, I'll use it for a 4th to give me an idea as to when this trend should change. And where did number 4 come out? Right at the retest of this break of trend, you know. So I mean, if we're looking at this, when did this break trend? I mean, right at that number 4. So now if we follow the same principle, where if we delete this, well, I'm not going to delete it because we just put it on there. So we went to the break of the trend. We could have used the tape measure tool. This is just equal amount of time for this trend to exhaust. How long did it take for the sideways trend to exhaust? Same amount of time. How long did it take for the bull run trend to exhaust? About the same amount of time. I mean, is it an exact science? No. Can you use it on small time frames? Yes. But you need to backtest that a lot and see how it actually works so that you come to the understanding that, you know, charts can trend up, down, or sideways, and when you reach a end of a time cycle, when it's not a high time frame, you could get a continuation of the same cycle. You could get 2 sideways trends, you know, but on the high time frames, I mean, this works pretty good. You know, downtrend, sideways, uptrend. Downtrend, sideways, uptrend. The question is the uptrend going to make an all-time high or not? You know, I think that we will see one more all-time high, unless we break down hard and come down here. I mean, there's a chart on here, the 8K macro projection, 50-50. That's where we were at when this was posted. Quite a long time ago. It's got the same kind of time cycles on it. So let's see. So our next cycle, when would we, you know, what type of price projection would we have? Well, let's look at the past cycle here. And let's pull out our Fib tool. And let's expand this range. Let's draw her up. When we expand this range on a log chart by you know, not the full, we didn't make it the full 1.5. What did we make it? 1 1/3 probably. We didn't even make it to the 1.441. So let's change that to 1.33. It's probably 1 1/3. Oh, look at that. Almost to the penny. Almost to the penny. It's off by 10K. It's not even. 1 1/4 maybe, which would be 1 1/4 expansion of this price range. Let's go 1.25. That's a 1.25 expansion, going from the low to the high and expanding this range by about 1.25. Probably do the 0.28 or whatever normally comes on the fib tool, and that'd be about what it is. So about 1 1/4, maybe about 1.3. So now let's do the same thing on our next one. Let's go from swing low to swing high. I'm going to move it over, line it up with that high, our 1.25. You know, this is coming out at that 1.411, just like we discussed before, you know, at about the 130K range. You know, still see the same thing, maybe 125 to 150K for a distribution range. And time-wise, where would we get our time cycle? Well, here's our downtrend, and we're going to grab our cycle tool. Well, we'll just leave it. Here, right here, we see our average rate of increase. You know, here's following these lows. So if we say this here is the average rate of increase, we would want to know about where. Oh, I got two lines here for some reason. Let's fix that. There we go. Stretch that out into the future, and all I've done is kind of pitchforked it just to see for any corresponding levels. You know, one range up, one range down, kind of like a Gann fan. You know, 1 to 1, 2 to 1, 3 to 1. You know, here's 1 to 1. Here's 2 to 1. You know, 2 to 1 on the other side. These are just visual draw-ins. I haven't marked these out, or these things probably aren't even at the true low. It's just a visual representation of where, you know, we would expect price to go, which you find it on the levels here. Probably if it came down, probably down to what, 22,350, you know, 22,250. If you get this right shoulder, come on down, may fake everybody out. Happens all the time. But as long as we stay above this line, you know, I would consider this model still valid. And I would even take another equal increment down to be about the 0 line for a double bottom. So let's see. So let's take the time cycle. Here's the trend. Let's go grab that fib time. This time, instead of using fib time, we're going to grab the cycle lines. What's the difference? Nothing. It's an equal amount of time. You could use a tape measure and just take it from the top, go to the arrow in the middle, and put it right where it broke trend. You know, I mean, that's how I first started doing it. It's just taking the amount of time for the trend to exhaust and actually break out and change trend. So right now we're at about 50% of this time cycle, and if you're wondering if this works, well, I'm just telling you that it does, and you should prove that to yourself by just looking at it. Sounds like we have a commercial. There we go. Look at 50% of the time cycle. You know, that's where you broke down and broke trend. Let's look at a quarter of the time cycle. That's where you broke down and broke trend. Let's look at an eighth of the time cycle. That's the bottom. You know, you can split this up. I like to go into these tools, and I find the Gann box, which I've modified by going into the settings, and I can split these time cycles up into quarters very easily. I mean, look at it. Where do I expect this next high to be? I'm looking for, you know, somewhere up here. The 618 and the 75% on the time cycle is coming out at what price? 41.5. 40,000, 42K, right in there. You know, right where this low resistance flip is, right here also. Anywhere up in this area. Exact price target, who cares? When the trend is exhausted, it's exhausted. You know, it'd be a nice A, you know, come on up. I don't want to say ABC, but maybe, you know. But here we should get a pullback and come back and retest this business right here. Hopefully, that'd be a nice slow grind up. But where does this line meet this average rate of increase? Thus far, anyways. We'll see after our next break to the downside or break to the upside. Maybe this line can come on down. You know, if we move to the upside, it's going to stay right where it's at. If we go to the downside, well, maybe it'll come down a little bit. But for now, this is the average rate of increase. Crosses the time cycle line. So here would be your downtrend, sideways trend, uptrend. And it's crossing that timeline right in the golden pocket expansion of 163. So, I mean, that's a legitimate target. But I like to go time, and half a time. So where is it 50% of the way? At 50% of the way, we're at exactly about 1 1/4 at the, you know, $125 to $135,000 price range for December of 2024 to June of 2025. Well, if you like the content, like, share, subscribe, join the Discord, do something. Join us. But until then, trade well.